Guys, let's talk about this next crash and where the bailout might come from, at least in my opinion. So, when we take a look, yes, we're hearing about the housing market downturn. We're hearing about auto loans, and we'll get into why Wyoming has an issue with auto loans at the very end, just a little bonus. But for right now, what we really need to look at is credit card debt and personal loans. So, those balances are exploding to all time highs. And if we look at demographics, it's really coming out of subprime and it's coming out of Gen Z in a big, big way. So what's happening is banks and private labels. So private label is, let's say, Kohl's or Costco or something like that, extends you a credit card. That's private label. So we're seeing an uptick. 22% of new cards are private label cards. So people are getting them at the retailer. At the checkout, oh, you get the credit card, like put it on the credit card and you get the discount. People are loading up on those cards and really racking up those balances. And in addition to that, it's a lot of these subprime borrowers that are doing this. So banks, retailers, these guys love this because they can charge them a higher percentage rate. Just think, if your credit's worse, you pay more in interest. So the banks are juicing their returns. Now, the problem with this is we're also starting to see 90-day plus delinquencies skyrocket. So right now we're seeing it at almost 2% at 1.94%. Now, that may not sound like a lot. You're like, 2%, that's nothing. 2% of the credit card balance is $17.3 billion. There's $866 billion worth of unsecured credit card debt out there. Now, unsecured means it's not tied to an asset, like an auto loan where they can come repossess the car, sell it, get some of the money back, come foreclose on your house, take your house back, go sell it, get some of the money back. If these delinquencies fall through and people are like, hey, I'm not paying this anymore, there's nothing to come recoup. They're not going to come get your Kohl's clothes. Hey, give me those yoga pants back and I'm going to sell them and get my money back. That's just not an option. These are pure write-offs for these banks if this goes sideways. And if you're a consumer, what are you going to stop paying first? Your credit card, your car, your mortgage? You're going to stop paying your credit card first because there's nothing for them to come take from you. If you're in that type of situation where you can't pay your bills, you stop paying the thing where there's no repercussions, at least not to the magnitude of repossession. If we take and we couple this with personal loans are at 22 million loans outstanding with a $210 billion balance. That's a 34% increase year over year. And then the worst part of all of that is that 58% of that are subprime borrowers. If you're a bank, that has to keep you up at night. That's got to frighten the bejesus out of you. The reason that the banks are willing to do all this is because they know that if these losses start to mount, that the government will come in and bail them out. And it's not going to be the housing market like we saw before. And I'll tell you why. Because most of the mortgages are owned by Freddie and Fannie already. So the government already owns those. There's no entities to come in and bail out. They've kind of already taken control of that debt. This debt, there's nothing to secure it against. So banks can't really sell it, and they're really going to be on the hook for that. So when that blows up, the taxpayer is going to have to come in and bail out one of these too big to fail banks or a multitude of them. There's just no way that they're going to be able to absorb this $866 billion gorilla that they've got sitting out there if everybody's suddenly getting laid off and can't get paid back. So for me, this is where I think we need to focus on and keep our eye on. I think this is where the next financial crisis comes, is it's going to be in these unsecured lines of credit, credit card, and personal loans. I don't think it's going to come out of autos, and I don't think it's going to come out of housing. I think we'll see slowdowns in both of those. We'll see some delinquencies uptick in the cars, but they can sell those assets and get some of that money back and minimize some of that impact. This, for me, is where it's sitting and is going to be just a behemoth that these banks are going to have to absorb. And they're only compounding their problems with loaning to subprime borrowers. Again, they didn't learn anything from 2008. They just shifted the product and they're loaning to the same type of borrowers, which I think is just going to lead us into a hole. Don't worry, I didn't forget about your bonus. So looking at you, people of Wyoming, when we look at new car loans, the number of $1,000 a month plus car loans out there is skyrocketing with, you guessed it, Wyoming leading the charge at 25.7%. What are you guys doing? I know that we all love really big trucks. I would like to have a 1-ton truck myself, but there's no way I'm eating $1,000 a month payment. We are kicking the butt out of Texas, which did break it into 20%, just over 20%. And then we even beat Montana. Montana didn't even make it 20%. They were like 19.8%. I'll throw this chart up for you guys. But yeah, so Wyoming, stop buying all the expensive trucks. Let's get these prices down. If you keep paying these prices, they're going to keep raising them and keep them where they're at. We got to get them down. Stop paying $1,000 a month. Anyway, keep an eye on those credit card balances. If you have credit card debt, pay it off now. It's going to be critical going forward. Get out of debt, get out of debt, get out of debt. And I will catch you guys in the next one.